more, though, on what some of the takeaways will be from the state visit. We're bringing in Stephen Orlins. He's the president of the National Committee for U.S. China Relations. So $400 billion in annual trade, U.S. and China. How difficult is it for U.S. business to go chase that growth in China right now and set up shop?
I think it's difficult, but I think U.S. businesses are actually succeeding. You know, since 2000, its trade exports to China have increased, I think, fivefold. It's approaching 100 billion of exports. It's our fastest growing export market. But obviously, there are a lot of difficulties. There's difficulties with indigenous innovation when you're selling to the government, and I think President Hu is going to deal with some of these issues when he's here.
What you hear from CEOs off camera, something we won't say on camera, of course, because of sensitivity, is that, you know, they're hungry to go to work in China, get products into that market, but there's the assumption that growth is capped at a certain point. You can't get too big as a foreign entity within China. Talk to me about some of those constraints, and talk to me about some of the constraints on tax policy as well. How are you treated as a foreign business right now?
Well, formerly there used to be tax incentives for foreign businesses in China. Last year they then equalized that with domestic companies. So a foreign entity in China is taxed at the same rate as a Chinese entity. The Chinese views that the 30 years prior to now, since the reform and opening policy began, was one where they needed foreign investment. Now they really want to put foreign investors on an equal footing with Chinese investors, and that's why the change in tax policy. But, you know, I think by and large, U.S. companies are doing well. If you look at surveys of U.S. companies, they are very happy with their businesses in China. Are there constraints to growth? Absolutely. But do they feel this is more core to their strategy? Yes.
So is it a distraction to have, you know, the other economic superpower, their president, come to town and have the majority of the dialogue, at least in the press, be around the currency issue, because that's what's at the top of Washington, or at least the congressional agenda? Does that hurt business?
It's certainly, having it at the top of the agenda does not help business. If you talk to U.S. businesses in China, that is not at the top of their list, the value of the RMB, the value of the Chinese currency. What is the top of their list is the impediments to sales to Chinese government, protection of intellectual property. That is what they believe the U.S. government should have at the very top of their list, not the currency value. In fact, they're very mixed on currency value. They don't even, you know, they believe inflation is a greater problem in China than the value of the Chinese currency.
And that's what you're hearing from some of the businesses that you talk to right now, worries
Absolutely.
About inflation?
Worries about inflation, worries about impediments to investment, worries about protection of intellectual property.
So what could
if the
change
Microsoft deal can get done,
right,
that's a terrific, that'll be a real deliverable of this summit.
So a deliverable from the summit, but how key will it be to an actual change in property? Do you really see a change from the top in terms of intellectual property protection?
Yes, I actually do see a change, and it's being driven not so much by U.S. pressure, but by the fact that China is creating its own intellectual property, and Chinese enterprises are demanding protection. So a Chinese enterprise demanding attention has more oomph with the government than a foreign enterprise or a foreign government demanding that from the Chinese government. So China is changing, but it is changing too slowly for the U.S. political process.